Welcome to our video on Chapter 2, Introduction to Transaction Processing, based on the 6th edition of Accounting Information Systems by James A. Hall. In this video, we will cover the objectives for Chapter 2, including transaction cycles, basic accounting records, documentation techniques, and the impact of processing technologies. A financial transaction is an economic event that affects a firm's assets and equities, is reflected in its accounts, and is measured monetarily. These are grouped into 3 cycles: expenditure, conversion, and revenue. This diagram illustrates the relationship between these transaction cycles, showing the flow of labor, materials, and cash across the expenditure, conversion, and revenue processes. Each cycle contains 2 primary subsystems, a physical component and a financial component, often separated by a time lag due to credit relations with suppliers or customers. In manual systems, we use source documents to capture data, product documents as results of processing, and turnaround documents that serve as links between systems. Accounting records also include journals for chronological entries and ledgers to maintain financial account balances, such as general and subsidiary ledgers. This figure displays the flow of economic events into the general ledger, showing how information travels from customer orders to the final ledger updates. In computer-based systems, records are maintained digitally. This diagram outlines the steps for verifying account data, including reconciling control figures with subsidiary account totals. An audit trail allows us to trace financial data in both directions. Accountants utilize techniques like sampling and confirmation to ensure accuracy along this trail. This is an example of tracing an audit trail for accounts receivable, moving from the general ledger down to specific source documents like shipping notices or deposit slips. In computer-based systems, the audit trail is less observable than in manual ones. The physical trail is replaced by data entry processes, computer programs, and magnetic files. Computer files are categorized by their function: master files for account data, transaction files for recent changes, reference files for constants, and archive files for historical data. Documentation is essential in a computer-based environment. 5 common techniques include entity relationship diagrams, data flow diagrams, and various types of flowcharts. Finally, the entity relationship diagram, or ERD, represents relationships between entities. The Ray model specifically uses resources, events, and agents as core entity types. Next, we look at cardinalities, which represent the numerical mapping between entities. These mappings are categorized as one-to-one, one-to-many, or many-to-many. This slide provides examples of cardinality mappings, such as a salesperson assigned to a car type or a vendor supplying various inventory items. Data flow diagrams, or DFDs, use symbols to represent processes, data sources, flows, and entities. They focus on the logical elements of a system, not the physical implementation. Here are the standard DFD symbols used to visualize these logical flows, including indicators for entities, data stores, processes, and the direction of data movement. Document flowcharts are more detailed than DFDs. They illustrate the relationships between specific processes and the documents that flow between them, clarifying functional separation. This chart outlines the standard set of symbols for document flowcharts, depicting items like terminal sources, manual operations, and various accounting records. When constructing a document flowchart, the first stage involves organizing activity by area, such as sales, credit, warehouse, and shipping departments. This figure shows the finished document flowchart, detailing the specific path of documents across those functional areas until the transaction is finalized. System flowcharts represent the relationship between input sources, programs, and output products in computer systems, often indicating the type of media used. These are the symbols used in systems flowcharts to denote computer-specific operations, such as direct access storage, online connections, and video displays. This illustration shows the initial stages of building a system flowchart, mapping out the flow of data from customers through to internal processing departments. The completed system flowchart seen here demonstrates how visual symbols effectively translate complex processing logic into a structured system overview. Program flowcharts are used to illustrate the internal logic of a computer program. They use specific shapes to denote decisions, start or end operations, and logical flow. Modern systems often utilize client-server architectures with real-time processing, while legacy systems remain common for specific batch-oriented mainframe tasks. Finally, this diagram illustrates the process of updating master files, highlighting the importance of primary and secondary keys in maintaining data integrity. In this video, we explore database backup procedures. Since destructive updates don't leave a backup, specific procedures are required to preserve records. This involves escaping the master file before an update and using a recovery program to restore the original version if necessary. Computer-based accounting systems are generally classified into two broad categories: batch systems and real-time systems. Each serves different operational needs within an organization. Batch processing involves grouping similar transactions that are accumulated over a period of time. This method is appropriate only when transactions are independent during that period, as there is a time lag between the event and its processing. This diagram illustrates the batch processing cycle with a sequential file. It shows the flow from initial sales orders and keying through the edit, sort, and update runs, resulting in a new master file. The steps in batch processing include keystroking source documents, an edit run to catch errors, a sort run to order files by a primary key, an update run for master file changes, and backup procedures to preserve the original records. Batch processing offers two key advantages: increased efficiency by grouping large volumes of transactions for processing, and improved control over the transaction process through the use of control figures. Real-time systems process transactions individually at the moment they occur, eliminating time lags. While they often require greater dedicated processing capacity and longer development times, these cost differences are decreasing. This visual provides an overview of real-time processing, contrasting the immediate nature of these systems with the delayed processing inherent in batch systems. Many accounting information systems still rely on batch processing because they handle high-volume, independent transactions, such as cash receipts. These can be efficiently processed during off-peak hours, even if data collection itself occurs in real time.